This segment is sponsored by Polston Tax Resolution and Accounting.
These are taxing times, and it's time that you know the law.
That's why our friends from Polston Tax Resolution and Accounting are always there for you. Let's check in with Rachel.
Good morning. It's Rachel Pappy, your favorite tax attorney from Polston Tax. Today, I wanted to share some great news that many taxpayers still have not heard about, and I know it will benefit thousands of taxpayers who owe taxes. The three major credit bureaus, Equifax, Experian, and TransUnion, have been removing IRS tax liens from their credit reports that they provide. So this means if you have an IRS tax lien, it should no longer drive your credit score down. Your credit score depends on a mix of factors, including credit card and loan payment history, credit utilization, length of credit history, and other considerations, which used to include tax liens. Previously, if you owed back taxes to the IRS or state and a tax lien was filed against the assets you own, this would be included on your credit report as a derogatory mark and could damage your total credit score. A tax lien was considered a severe negative mark against you, and much like if you had filed for bankruptcy, had judgments against you, had bills in collections, or had a repossession, it would hurt your credit score. Having any one of these derogatory marks could drop your credit score by over 100 points. Having a bad credit score can affect your ability to get a loan, get a credit card, or cost you heavily in high interest rates for any loans or credit cards you may have. The IRS or state revenue agency usually places a tax lien on your property or home when you have an outstanding tax debt. A tax lien stays on that property until you sell it, and then the lien will require that the proceeds from that sale go to the IRS or the state to pay off that tax lien before you will receive any money. Now, with this change to the credit reporting, that tax lien, it will still be filed in the public record against you. This means even though it may no longer appear on your credit report and affect your credit score, it will still be a publicly filed document that can be searched for and found by creditors. So for example, if you apply for a mortgage, the lender could still see that you have a tax lien filed in the public record and could end up giving you a higher interest rate because of it or deny your loan altogether. Or even if you don't need to apply for a loan, it is still important that you take care of any outstanding tax debt because the IRS can still take collection action, like garnishing your wages, taking money from your bank account, and like I discussed, they can still file public tax liens against your assets. Finally, if you find that your tax lien is still reported on your credit report, you can contact the credit bureaus directly to request to have it removed. Or you may also be able to qualify to have the tax lien withdrawn from the public record entirely through a process with the IRS. If you have a tax lien or think you may be in danger of having one placed on your assets, you may need to hire a tax attorney to see what your options are. Polston Tax has helped countless clients across the nation save millions of dollars on the taxes they owe and reach an agreement with the IRS and state. Feel free to contact us at Polston Tax if you need someone to fight for you to resolve your outstanding tax debt and get your financial situation back on track. Now back to you.
Rachel, thank you so much. Polston Tax Resolution and Accounting has 5 locations: Oklahoma City, Norman, Tulsa, Wichita, and Kansas City. You can call them at 405-801-2146. They also assist clients nationwide.
You can find Polston Tax Resolution and Accounting on social media too. Just look for Polston Tax. Their website is polstontax.com.